Imagine telling people you made $14 billion in 3 months. Well, how did you do this, you may ask? Well, here's the weird part. You actually sold or did not sell anything to earn it. Your actual business, the one where you actually have to sell stuff, did about 120 million in revenue. So where is the rest of those billions? That came from one asset. An asset that went up like crazy. Might sound ridiculous. Well, it's a true story. In the second quarter of 2025, one company did indeed report $14 billion in operating income. That's a 7,000% increase in profits from doing, well, nothing. And here's the thing that makes this video even more interesting. This is the exact second time this exact company numbers went completely bonkers. The first time, 25 years ago, the same guy you're looking at lost $6 billion of his own net worth in a single afternoon. So the question isn't really what happened. The question is, how does this keep happening to the same man? Well, let's get into it. Okay, well, the 90s, there's a software company called MicroStrategy. They do business intelligence, the two most boring words in finance, which is basically finance talk for saying they make software that turns a company's spreadsheet into, well, a slightly nicer spreadsheet. Basically, when your boss takes a whole day to justify their usefulness, while the task actually only takes an hour. It's run by this guy called Saylor, MIT grad, genuinely brilliant, and this matters for the whole video, a believer, well, not in anything yet, just generally in the bit. Whatever the bit turns out to be, Saylor is going to go all in. In 1998, the company went public, and this is the dot-com boom, so boring software company doesn't matter anymore. What matters is anything with a website and policies going vertical, well, because stocks go up. The stock takes off like it's strapped to a missile. By the early 2000s, it's up over 1,000%, and Saylor on paper was worth around $13 billion. Hold on, that little on paper tag, it's about to do a lot of work. Here's the trap of being a rocket stock, though. Once everyone expects infinite growth, well, you actually have to, keep growing. A boring software company can only sell so much boring software, so the question becomes, how do you keep the numbers going up when the business isn't? Well, MicroStrategy and Saylor found an answer. A very, very bad answer. That might have got them into a little bit of trouble. That answer was called they got a little creative accounting. It's actually called revenue recognition. And I'll make it quick and painless. Say you sign a customer to a 6-year deal worth $6 million. Well, the honest way to count that is roughly add $1 million a year to your earnings as you actually do the work and deliver the product. The fun way, the way that makes any quarter look incredible, is to book the whole $6 million right now, today, up front. Do that across enough deals, time them to land right at the end of each quarter, and you can make a company that's losing money look wildly profitable. You're not technically inventing new customers. You're just, counting tomorrow's money today, and hopefully nobody checks the receipts. Well, unfortunately for Saylor and MicroStrategy, in March of 2000, somebody did check the receipt. MicroStrategy announced it had to restate years of financials, and when they redid the math, the honest way, the whole story flipped. The profits they'd report weren't profits. They were actually losses. The company that looked like it was printing infinite money had been quietly bleeding it the entire time. Wall Street reacted the way Wall Street reacts. In one single day, the stock dropped about 62%. And on that paper $13 billion we were talking about earlier, well, Saylor, unfortunately for him, lost $6 billion of net worth in one afternoon. At the same time, it is one of the largest single-day wipeouts of personal wealth anyone had ever recorded. Even by Wall Street bet standards, vaporizing $6 billion before lunch. Well, I think if that happens, Saylor would be the top post on Wall Street bets. However, it got worse. Because this wasn't just a bad quarter, it was fraud. The SEC charged Saylor and 2 other executives with accounting fraud. They settled without admitting or denying it, and Saylor personally handed back about $8 million, plus a penalty. The company nearly went bankrupt, gutted its staff, and then, it became the most unsafe thing imaginable. The company became, a boring software company again. For about 20 years, MicroStrategy went quiet, a normal mid-sized software company nobody thought about. And that should have been the end of the story. Well, it was not. Fast forward to 2020, the world's locked indoors, governments are printing money by the trillions, and Michael Saylor, now around his mid-50s, sitting on a pile of boring software company cash, looks at that cash and decides he wants to do something with it. Because he thinks inflation's going to eat it, he needs it in something that physically cannot be printed. Introduced him to Bitcoin. In August 2020, MicroStrategy becomes the first public company in America to put Bitcoin on its balance sheet as its main reserve asset. The first buy is about $250 million, which was roughly, well, the company's entire rainy day fund. He didn't just dip a toe. He went all in. And then he found the cheat code. Saylor realized he didn't have to buy Bitcoin, it's just the company's money. He could issue new stock, dilute shareholders, and borrow billions, and pour all of it into more Bitcoin. The software business simply became a side quest. Today it does about $120 million in quarter. And it's, well, basically just a rounding error to the company now. The company is functionally a giant Bitcoin company wearing a software company as a hat. Which brings us back to the numbers getting weird. This happens in 2 stages, and stage 1 is, well, genuinely kind of funny. Under the old accounting rules, Bitcoin count has an intangible asset, and for those, it was brutal and kind of stupid. If the price went down, you had to, well, book loss because your asset went down. But if it went up, you weren't allowed to count it. Not until you actually sold. And Saylor's entire personality, allegedly, is that he will never sell. So for years, MicroStrategy's official financials could only ever record Bitcoin going down, and the price could triple, and on paper, the company just reported losses. It was the accounting equivalent of being legally required to remember your L's. Then on January 1st, 2025, the rules changed. New standard, you now mark your Bitcoin to its real market price every quarter, gains and losses, both flowing into earnings. Overnight, that single rule change added about $12.5 billion to the company's books. And this is where the company's financials went super bipolar and, well, lost their minds. Watch this sequence, all from 2025. Q1, a $5.9 billion loss. Q2, $14 billion gain. Q4, a $12.4 billion loss. Nothing about the actual business changed between those quarters. Same boring software company. The only thing moving these numbers was the tens of billions in both directions of where the price of Bitcoin was going. Drop in the fact that he kept buying. By 2026, the company holds over 800,000 Bitcoin. It raised so much money by diluting and selling its own stock that it became the largest issuer of new shares of any public company in America. 2 years running, it even changed its name, MicroStrategy, to Strategy now. Here's the part that, well, kind of makes me laugh. That 2025 rule change, the one that now let his earnings swing by billions, Saylor personally campaigned for it. The same man who got nuked by regulators in 2000 for being too aggressive and creative with his numbers spent 2023 publicly cheering for the new rule. He didn't beat the system that broke him. He waited 20 years and got it rewritten. So back to the question from the top. How does the same company's rule numbers go insane twice? Here's where I think is the real story. Both times MicroStrategy reported numbers completely detached from a normal business. But look at the difference in how the first time the weirdness was illegal and hidden. It was, well, fraud. He counted money that wasn't real yet, got caught, and the market destroyed him for it. The second time, the weirdness is completely legal and fully disclosed. Every wild swing is right there in the filings, audited by the books. And for this version, the market loves him. He's a folk hero. Same man, same gift for making numbers do backflips. Opposite ending. The only thing that changed was whether the rules were on his side. But don't mistake legal for safe. What he's actually built is a machine. The company sells stock to buy Bitcoin. Earning all that Bitcoin pushes the stock up. A higher stock lets him sell more to buy more Bitcoin. On the way up, it's a perpetual motion money machine and basically infinite money glitch. You buy in and you look like a genius. However, the problem is with a machine like this is that it runs in reverse just as well as it does going up. If the coin falls hard enough, the stock falls, which makes raising money brutally expensive. Right as billions he borrows started coming due, the accounting doesn't cause any of this. The accounting is just standing there, narrating the madness in real time, and, well, we're kind of seeing the later option happening right now with the price of Bitcoin going down, which leaves two questions now. One, how did this man do this twice? And second was once when the bubble was a .com, once when it's a coin. So now the question is, will we maybe see Saylor do a third act, or will this be his final act? Only time will tell.